Rise and grind, trading family. 3 shows ago, we told you Wednesday was the day. We said it Monday. We said it Tuesday. Wednesday decides. Well, Wednesday decided to punt.
Quick note before anything else. Nothing we say here is financial advice. We're two guys reading the 20th extension of the same ceasefire at 5 in the morning.
That is literally what this is. The ceasefire extended again. Hormuz closed indefinitely. Oil sitting at $91. Not 120. Not 70. The one outcome nobody had a playbook for. More of the same, but now it's permanent.
Bloomberg this morning called it the best case of the bad options. And traders are currently pricing $120 a barrel if attacks restart. So that's the ceiling, not the floor.
And then the Russia layer drops on top of all of it. 600,000 barrels per day, gone from Ukrainian drone strikes. That's on top of Hormuz. 2 supply shocks. Stacking. At the same time.
That's what breaks Monday's framework. One disruption, you can model demand destruction as a ceiling on oil prices. 2 simultaneous shocks hitting from different directions. Supply has a floor now from both sides.
Trump says tonight is still a live deadline. Washington time, which we've heard before.
3 times this week.
The pattern is the pattern. But here's the one that actually shifted how I'm thinking about this whole situation. Singapore's foreign minister called Hormuz a dry run for a United States-China clash. Not a trading thesis. A reframe.
We've been asking when oil normalizes. Singapore is asking, what if this is just what things look like now? Hormuz as rehearsal space for a bigger conflict. Markets are treating this like a temporary disruption. Singapore is treating it like architecture.
And TB had the third framework. Walk them through it.
I called it blind faith with zero plan B on Monday. The can kick is the plan. The extension is not the pause before the strategy. It is the strategy. Nobody has a plan for what comes next. The market has priced in, eventually this resolves. Worth examining that right now.
Iranian tankers running dark transponders. The Navy boarding ships off Sri Lanka. And the foreign minister of Singapore calling it a dress rehearsal. And oil's at 91. That's a weird number for everything that's in this market right now.
91 is weird because both sides of the trade are right. If you think escalation is coming, 120 is cheap. If you think this holds, 70 is the right number. The market doesn't know either. So it's sitting in the middle and not moving.
That's the show. That's been the whole week. All right, oil. Avis, ticker AVIS. $90 to $700. One session. Halted multiple times. Massive squeeze move.
26% short float on 34 million shares. The math was right there.
1 week after the pattern day trader rule got eliminated. 1 week. And before that, Bird, ticker BIRD, went 573% in a few days. Back on April 16th, we said the casino has no security guard. That is playing out in real time right now.
Mike Jones flagged it as risk on short squeeze mode. Drew the 2021 comparison right away. And he warned about reversal risk in the same breath.
Because someone bought this at $650. That person exists. And now they're watching the exit.
Direction on these moves is real. Magnitude is the squeeze. That's the same pattern I noticed with the commodity trading advisor buying 2 weeks ago. The move happens, but not for the reason you think.
And I want to be real clear about something. I am not celebrating IVs. I'm flagging it. This is what happens when you remove guardrails and the tape is already running hot. It's not a play. It's an example.
The Nasdaq closed above its 200-day exponential moving average yesterday. First time since 2022. That is a technically significant mark.
Bullish signal?
Technically, yes. But if the base of that move is short covering rather than real demand, the line might not hold the way the chart says it should. If the buyers are covering shorts and not taking new longs, there's nobody left to hold it up at that line.
Technically bullish. Fundamentally sketchy.
Welcome to April.
Kevin Warsh sat for his Fed chair confirmation hearing yesterday. This shapes the next 12 months of rate policy, and we need to talk about it while it's fresh.
Questions around his investment portfolio and potential conflicts. Complex financial holdings that raised some eyebrows during questioning.
Disclosure concerns came up during the hearing. Said he'd sell the vast majority within 90 days. Vast majority is not all of it. That's the part I keep coming back to.
He hinted hawkish at the hearing. The 10-year Treasury moved to 4.29%, up from 4.25 after the hearing. Bond market shrugged, but the signal was there.
And then Trump went on CNBC and said he'll be disappointed if Warsh doesn't cut rates immediately. His own pick. Just hinted the opposite. At his own confirmation hearing. That is a collision before the guy even has the job.
Core PCE has been volatile and elevated recently. If Warsh is genuinely hawkish, and the hearing suggested he is, he cannot mathematically deliver what Trump is asking for. Those two things cannot both be true at the same time.
So either he folds the moment he gets the seat, or Trump is about to be very publicly disappointed by his own nominee.
And what this means for markets. The AI CapEx thesis has been built on the premise that cheap capital eventually comes back. If Warsh holds rates elevated, that foundation breaks. Every big tech position built on that thesis has a different risk profile than it did yesterday morning.
Now, I want the audience to hear this one from TB. He put this together, and it is the line of the week. Go ahead.
Apple and Amazon are both reportedly afraid to file for legally owed tariff refunds. We're talking $127 billion in refunds they're eligible for under current law. The president said publicly he would remember companies that filed. UPS and FedEx filed anyway on April 21st. Apple and Amazon did not. Think about that alongside this. The next Fed chair won't detail his investments under oath. The biggest companies in the United States won't file for money they're legally owed. That's the same fear wearing different clothes.
One sentence. Full stop. That's the show. Power overriding the market? That's the thesis. And you're seeing it in two completely different places in the same news cycle. Tesla, ticker TSLA, sitting at $386 right now. Tuesday, TB called 392 as the support level. It broke through it. Tesla is now below its 200-day exponential moving average heading into earnings tonight.
The boycott discount is real. Musk's Doge baggage hasn't priced out. Bad guidance could gap it down 10 to 15%. Clean numbers and it recovers. Tonight decides.
Either direction, we're finding out after close. That's live ammo on the table. Now, Coinbase, ticker COIN, down 7.49% yesterday. Same session that Bitcoin was up 2.25%. Same day.
Polymarket and Koshi launched perpetual futures yesterday. Direct infrastructure competition. $210 has been resistance for Coinbase since 2021. It failed that mark again. Mystery solved on the drop.
What's the thesis?
Bitcoin doesn't need Coinbase anymore. The asset is fine. The infrastructure layer got disrupted. Those are two different things, and the market is just now separating them.
Apple, ticker AAPL, $266, down 2.53%. Monday we said the Cook succession looked orderly. That read aged 48 hours badly. The market is pricing China diplomatic risk now, not the management transition.
That's 30 seconds on Apple. The longer story is still developing.
All right, systems. My TFTKLA Corporation, ticker KLAC, stopped out for a profit this week. Locked $65. Clean close. My only active position is Johnson Controls, ticker JCI, 95 cents above its stop. I'm sitting at 96.6% cash. The system's answer to tonight is sit in cash and watch. And I'm not going to fight it.
WaveTrader has 4 runners right now. Rambus, ticker RMBS, up 9%. Marathon Digital Holdings, ticker MARA, up 11.5%. Uranium Energy, ticker UUUU, down 2.7%. And ServiceNow, ticker NOW, up about 2%. WaveTrader is at 73% cash. Total profit across open positions, $8,569.
And ServiceNow reports tonight after close. That's a live position going into an earnings print. Tell them the honest read.
ServiceNow in at $99.74. Currently at $101.72. Target 1 was hit yesterday, partial profit taken. My system bought this during the Monday sell-off, not me. The algorithm chose it. I don't override the model to find out early. That's the whole design.
That is what automated trading actually looks like. Not glamorous. You built the thing is running, and now you're watching.
Right? And if ServiceNow and Tesla both miss tonight, that's a tech earnings double hit. Into a VIX sitting at 19. Into a truce that just extended indefinitely with 2 oil shocks stacking. That's what Thursday morning looks like in the bad scenario.
Monday, I said that sell-off was noise. TB said it was signal and bought the dip. Scoreboard currently says TB.
I have a live position reporting in an elevated tape tonight. Come back Thursday before you hand me anything.
Running equity for the record. My TFT account at $110,621. TB's Wave Trader at $115,213.
Win rate on Wave Trader at 82.4%. Neither of us is overriding the algorithm tonight.
That's the whole point of building the systems in the first place. All right. Tonight is double loaded. Tesla earnings after close and Trump's Iran deadline. Same evening. 2 live grenades on the table. Here's what we're watching tomorrow.
Tesla at 392, that was support. Now it's resistance. Good earnings breaks back above that mark. The trade resets. Bad earnings, watch 360 as the next floor. Oil at 91 is the anchor. Bloomberg has the restart scenario priced at 120. Deadline passes clean tonight. Watch for relief back toward 85.
NASDAQ 200-day exponential moving average. That's the technical confirmation level. Holds through a tech earnings night. It starts to mean something real. Breaks. The short covering story starts unwinding.
ServiceNow at 104 is my Wave Trader target 2. Gaps above on earnings. The algorithm exits the rest of the position. Opens below 99, I'm stopped. We'll know by 5 in the morning.
Both systems going into tonight positioned. Neither of us touching a thing until the market tells us what to do. The market's been kicking this can for 3 weeks. Eventually, someone stops delaying and starts deciding. We'll be here when that happens. See you tomorrow, Trading 4. And remember, patience is a position too. Don't let the noise make you trade it.